All right. Hi, everybody. This is Patrick. I am the creator of the Algo Targets Indicators, and we're going to do a walkthrough on the Edge Scalper. And this is going to be mostly focused on futures trading. Now, you can use this for crypto, you could use this for options, you could use it for shares, anywhere you want to see a defined risk reward setup. So, let's get into it. So, the first thing is, I would say if you've got access to this already, you already have this link. You can go to the Edge Scalper by Algo Targets page on TradingView. And this is going to have a good description of all of the features, kind of a highlight view to show you how the triggers work, the stops, the basic trading rules. And really, you could just take this and start trading the system based off of the information on this page. But we're going to go through some actual examples here as well. The other thing I would recommend is to go to our website, scroll down to the bottom, and click on user guides. And this is going to give you user guides. These will always be the latest, most updated user guides for whichever version is available on TradingView. So if we go back to this screen here, just to give you an overview of what it looks like, you have a stop loss level here, you have a trigger, and you have two targets. Those four levels are going to make up the Edge Scalper system. There's a lot we can do with that. I'm going to go through kind of the basics today and then maybe show you one or two kind of more advanced ways that you can use this. But just to kind of get an idea of it, this is exactly what you should look for. A trigger, you've got two target options, and you've got a stop loss. So now let's go to the chart and run some real trades. So once you're over on TradingView, you want to make sure that your chart is set to electronic trading hours, regardless of what ticker you are trading. And you want to set your time frame to New York. Now, this is more important for the flood zones indicator and the way that that one fires off alerts at a certain time of day. But if you've got the flood zones installed as well, then you've already done this step. So that's the basic overview. Now let's get to time frame selection. So when I'm looking for time frames, ideally you kind of want the smallest time frame you can get if you're scalping, right? We're taking small measured moves. We're getting in, we're getting out, we're taking frequent trades. It's the hardest kind of trading there is. There's no harder trading to do. You don't have to use this for scalping. You could certainly just use it for day trading larger moves on larger time frames. But I think most people who are looking at this for a scalping system are going to be looking at smaller time frames. So what I want to show you here is if I go down to like the 1 second. Now this is an extreme example. I don't recommend trading anything on the 1 second. You'll see that the system, once we come back online here, does give you some signals. But this is not a tradable chart. And you've all seen charts like this. Any ticker that has low volume is going to look like this. You're going to have lots of little gaps. It kind of looks like a bunch of little mini barcodes. And on some tickers, depending on the time of day, you'll actually get huge gaps in the chart like this. You actually have all these little breaks. This is no good. We don't want this. We want to make sure that there's structure in the chart so that the indicator has the data that it needs to make accurate price predictions. So 1 second is no good. Now ES is a very liquid ticker. You could probably go down to the 5 second and still get decent structure. I'm going to use the 30 second. Now, of course, the 1 minute, the 5 minute, those all work as well. And of course, this works on Amazon, Apple, Nvidia, any liquid ticker. And if you're going to something like a small cap that doesn't have a lot of liquidity, you'll just have to go up in time frame. Okay, so there's no one time frame for every ticker. They're all different, but you know it when you see it. You can look at a chart, and if you can see clean structure and there's not a bunch of gaps in the candles, then you're good to go. So as the day is starting here, let's say that you are going to trade the S&P 500 during the New York session. And whether you're using this chart to place SPY contracts, or you're trading SPX or anything related to S&P 500, they can all run off the same chart. The same rules apply. The first thing we're going to do is draw a line right here at 10 o'clock. That's 10 a.m. New York time. And the reason I do that is because I don't want to take any trades in the opening 30 minutes. I want to let things settle down. I want to let the imbalances from the overnight session sort of get taken care of. And this is especially true if you're trading something like NQ, which is wild. So if you trade NQ, you already know that you're in for a wild ride. Okay, so let's look at trades after 10 a.m. Well, actually, let's look at this first one. Okay, so the day starts out. Now we're not taking any trades, but we're just going to watch this and see what happens. So we have a setup here. Price comes down and bounces right on our trigger. Now this is already giving us kind of our first cue of the day, because what you'll notice is that this trigger level is very important, and the algorithms will more often than not respect it. And that's all we need. We just need them to respect it, because if they respect it, then that's the algorithms giving us a signal of intent. And so we can act on the signal of intent if we know where to look, and where to look is this trigger line right here. So you might ask, well, why don't we just enter a short up here? Well, the reason, I'll show you that later, is because we don't know this is going to happen. We can't predict this. That's not part of the deal. We need to wait until price comes to here and see what happens. So we bounce off of this, we wick through it, and we push up. That is not a close under the line, so we can ignore this. And a lot of times what you'll find is that a wick through a trigger ends up being a local high or low. So now we've got a bullish bias already. We haven't even taken a trade, and the chart is already showing us that it's going to do something bullish, most likely. It's all probabilities, but most likely we've got a bullish move. And then we do get a bullish move. It kind of comes up here. And then we get two bullish setups, one after the other. And so let's see how they play out. And by the way, while you're looking at this chart, if you ever want to change any of the colors, you can just go into your settings right here. You can scroll down and you can say, you want to change the targets or the triggers to be white or blue or pink or whatever you want to make them. I'm just going to leave everything at the default right now, but you can go in here and you can change this. We'll go into position size in a little bit. All right, so very first trade, this is why we don't go long right off of the stop level here, is because we don't know what's going to happen right around this, right? We can just go all day long. Well, we come down, okay, and then we come up and we trip this one right here. And I like to say we tripped a wire, right? It's like tripping wires. And so if we zoom in, I'll show you exactly why we can take this trade. So this candle closed above the trigger. It's very simple, right? So if you know candles high, low, open, close, high, low, open is down here, and the close is here. So all my bullish candles are white and my bearish candles are gray. So that right there is a signal. And so now what we can do is we want to enter as close to this line as possible. Ideally, we get a little bit of a pullback. We don't always get that. Sometimes the candle pushes up and it closes way up here. That's no good either. We're not going to take that trade. We want a good risk to reward that's going to give us some money. We don't want to just, we're not trying to trade pennies and risk our whole account. Now, your highest probability trades will always be taking profit at target one. I think that's self-explanatory. How high is the win rate? Well, it varies. Every ticker is going to be a little bit different. This has been widely tested across tickers and time frames, and the general ballpark is somewhere between 70 to 90%. Now, I have to say generally, because past performance does not guarantee future results and all of that stuff. I can't say this has an 80% win rate across the board. It doesn't have an 80% win rate. Sometimes it's going to be a little bit lower and sometimes it's going to be a little bit higher. But in general, any ticker time frame that you can observe is respecting these levels is going to have a positive expected value. But that's kind of how it works. Now, the other thing you might notice here is that we're risking from here down to here. Okay, we've got a trigger where we're entering. We've got a stop loss where we're cutting. And this is our risk zone. And let's say that we're risking $100. Well, this right here is a 0.75 to 1, which means that we are going to make $75 for every 100. Now, there are a lot of systems that say, nope, you've got to have positive RRs and, you got to get, 1 to 10 and all this kind of stuff. And let me tell you what, when you're going for base hits and you're scalping, going for these massive runs, good luck. If you can catch, if you're a momentum trader and you can take a whole bunch of tiny losses and catch 1 or 2 big trades in a week and that's going to make your whole month, awesome. But even if you are a momentum trader, I would argue that using this entry and stop system would still get you much better entries than maybe you're getting right now. What this is showing is the levels that price is likely to go to. We can't say it's likely to go to the moon on every single trade. What we can do is say it's likely to go to here. And so that's where the target is. Now, we have two targets here, and that is to give you a little bit of flexibility, because both of these in all of my testing are positive expected value. And in fact, holding to target 2 actually edges out holding to target 1 on most days, even though the win rate's going to be a little bit lower. And so what it really comes down to is whether you're trying to maximize your returns and you're willing to have more red days because you know the green days are going to be bigger, or if you're trying to get base hits and have a positive net P&L at the end of every day. And it depends on your own psychology. So what it is that you want out of the day, there's a couple of different options here. So we enter the trade right here, and let's say we're just going to cut our whole position right here. Okay, so we risk $100, we made 75, we're out. Awesome. But this one's a little complicated because we have this other setup that's sitting right here. Well, closing above here also tripped this one. So we would kind of be crazy to cut our trade because now we've got another confluence here that wants to take us to the upside. So in this exact case, even if I were a target 1 trader and I was only going to cut my positions at target 1 and get in and get out, I would still hold my trade here because I've got another target 1 that's sitting here that's now just validated. Okay, so edge case, 2 back to back. Now the question is, how far back do you go? For me personally, everything I've seen and the way that I use this, I go back 2. I don't go back 3. I only go back 2. It doesn't mean that 3, 4, 5, 6 back won't have some effect on the price action, but there's so many of these setups, there's so many trades. We don't need to take every single trade. We don't need to overcomplicate it. Just look at the recent ones, right? This is showing us what the algorithms are intending to do now, right? This is right now. So I care about right now, getting in, placing my stop, letting it hopefully hit my target, and if not, getting out and waiting for the next trade. So that is a target 1 trade with a backup here that helps us get up. And so you'll see we hit target 1 here and we hit target 1 here. Okay, now let's say that we are a target 2 trader. So we're going to hold our entire position to target 2. So we enter here, we've got $100 on the line. We come up, we reach this target, and now we have exited at right here at 150, or excuse me, 150 in profit, right? Because this is a 0.75 return and this is a 1.5 return. So we risk 100, we're going to make 150. So like I said, we would exit here, but because we've got this backup here, we can write it just a little bit higher and probably take some profit right there. So now we've actually taken it up and we've made 150, and then we got a little bit of extra juice because of this previous one that was just hanging out waiting for us. So that is how you take trades either to target 1 or to target 2. All right, so let's keep going over here and let's find one that did not win. So here we have this one, and we'll put a line right here. And actually, this one did not get validated. So if we zoom way in, we'll see that price came up, and here's our big E for the edge scalper. We kind of did this thing I was talking about earlier where we kind of bounced around the stop level here. We came up, and it stopped at the line. And again, just like we saw earlier in the day, this is a bearish sign because what it's saying is they know where the line is, we know where the line is, and we now know that they don't want to go any higher. Or if they do want to go any higher, they can't go there yet. They've got more business to do. So it comes back down, we get another wick, comes back down. Now we've got the classic double top situation, right? You've seen double tops all over the chart all the time. We're always looking for double tops. Well, now you have a double top on a trigger level. This is showing you the structure. This is showing you exactly where the decision level is. And the fact that you get a double top and a decision level right there at the same time, that's a pretty great signal. So if you're a momentum trader, we don't have a downside target, but that's a pretty good short signal. All right, now, another big challenge with scalping, especially scalping because it goes so quickly, is that it moves fast and you want to size the same. So it's very easy to say like, okay, well, I'm going to risk $300 per trade. Okay, that's the max I'm willing to risk per trade. And if we've got about an 80% win rate or even lower it a little bit, then you can estimate out, how many trades you can survive in a row before you have to call it quits for the day. So I'm going to use $300 as an example here. So we can go into our settings here, and we've got risk per trade. Let me just zoom in on this, make this real big. Whoa, too big, too big, too big. Okay, here we are, right here. Risk per trade, tick value, and ticks per point. Okay, so tick value is $1.25 for micros. Okay, MES. Full size ES contracts would be $12.50, so 12.5. But I'm going to assume everyone's trading micros because trading full size is crazy, but some people do it. And here we have some examples. You can hover over this. So it says M and Q equals 0.5, MES equals $1.25, Apple equals 0.01. And I will show you how that works. So risk per trade, we're going to put this at $300, and this is our per trade risk, okay? And this is measured from the trigger to the stop loss. So I'll show you exactly, I'll give you an exact example of this. And ticks per point, we have 4, okay? So there are 4 ticks per point. Each one is worth $1.25, and our risk per trade is 300. Yes, even though we're trading ES1, we can trade micros using the ES1 chart. So that explains the discrepancy there. Then we can do show position size. And you'll see we got a little label here that popped up on our chart. We have 13, 9, and we can make it bigger if we want to. Large. Wait for it. There we go. Doesn't get too much larger, but it's a little bigger. Why does this matter? Well, this matters because if I want to take this trade right here, normally, if I say I want to risk $300, I have to get out my measuring tool. I've got to measure the trigger, measure down here to the stop loss. I've got to say, okay, it's 6.5 points. It's 26 ticks. $300 divided by 26, right? And I got to figure out, I can buy 9 contracts, right? Well, we don't have to do any of that anymore. All you have to do is put in your risk, and it will tell you. If you enter a $300 position here, or excuse me, if you enter 9 contracts right here and you take a loss, you will lose $300. So this is telling you how much you will lose when it goes from here to here. Now, you can also figure out pretty easily how much you stand to make there as well, right? Because if here to here is a 0.75 return, well, that means that if you enter here with 300 of risk, you cut at target 1, you are going to make $225 because that is 75% of 300. If you hold all the way to target 2, you will make $450 because that is 1.5 times 300. And that is how it works. Now, if you go over to something like Apple, so if we type in Apple here, and we're trading AAPL, whoa, crazy, all right? You can see these numbers don't match anymore, and that is because it thinks we're still on ES. So that is why this dashboard is here. The dashboard is to remind you at a glance, if you are someone who is clicking around a lot on your charts and changing over to different tickers, you want to make sure that this is updating, okay? And there may be an update in the future that will auto-detect your ticker and then update this automatically, but it's a little tricky because there's like a billion tickers in the world. So here we say we still want to risk 300 per trade, but we're going to change our tick value to 0.01, and we're going to say 100 ticks per point. And this is going to show us if we want to risk $300 on these really small moves, how many shares we would need to buy. All right, so if we go from here, just to show you an example, if we go from here to here, this is 51 cents. So we can work backwards here and we can say, okay, well, if we bought 566 shares and we took a loss of 51 cents per share, we would lose about $288. And that is where this is coming in. So it will undersize a little bit because of the granularity, right? These are expensive shares. And if you did want to take this trade, let's see, 240, where are we at? 247.80, so 566 times 247.80, so you would need $140,000 to take this trade. Or you could trade options, which is the other way to use this system. So we'll look at that in a second here. So Apple is not the most efficient use of this system when you're going to trade shares. You would want larger moves. Now you can do that. We can go up here and we can go to the 5-minute chart, and we can use this system on the 5-minute chart. And so we'll see a lot of what we saw before, but our timeline gets stretched out, right? Because we were looking at one day and we had about this number of setups in a single day. And if we had gone down to the 15-second chart on ES, we would see about 3 times as many trades. So this is where we kind of get into showing you a little bit more, right? A little bit more, a few other interesting tricks and features here, ways that you can use this to make money. If we look at the 5-minute chart, now this is 5 minutes, okay? You get, during the New York session, you get one trade. Some people, that's great. They only want one trade. Give me one good trade and I'm in and out. And so this one, we predicted here that we were going to close under here, and then that this was going to be our target too. What you will find is that longer time frames, better structure, more reliable. But timeline, time frame gets pushed out in terms of time expectancy on how quickly your trades are going to resolve. So if you're trading futures and you can swing the contracts and you've got margin to do that, then this is a great use of that. If you're trading on a prop account, or you're trading in a discount broker with a smaller balance, and you're trading micros and you need to close all your trades by the end of the day, we've got to zoom in and use smaller time frames. And so this system was designed to work as best as it can on the smallest time frames that we could get it to work on, so that you have the flexibility. And once we get it working on those really small time frames, the larger time frames are easier, to be honest. So here you can see we've got some structure here. This came up, opening bell, but if we had entered in pre-market and we're going to ride this trade up, it would hit our target 1. This one, we get a wick bounce. Again, very frequent. We're going to see this over and over and over again, and you're going to get really good at spotting the way that these things work. Here we have a close above the trigger. That's going to take us up, 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 up. We're going up, 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 ba-dum, ba-dum, ba-ba-da-ba-da-da-da. Here we go. Look at this one. We close up above target 1. Ignore. Walk away. We don't want that one. Let's see what happens here. This one gets a little goofy. I'm going to ignore this one now because it's now 1, 2, 3 back. So we have a new setup here. And 1, 2. I'm not going to look at the third one. Although, oh yeah, if we would have taken that, we'd get stopped out there. So third one is no good. Is no bueno. No bueno. I'm going to show you one last thing. We're going to go back to the 30-second chart. All right, so now we're back over here. We're actually going to get rid of our position size because we're done with that lesson. And we are going to put on, we're going to say this is designed for defined risk. That is the whole point of this system, is for defined risk. But I hear what you're saying. You're saying to me, Patrick, I trade futures. I trade futures and options. It is hard to type when you have a microphone in front of you. I trade futures and options. How do I maximize this? Well, there is going to be a whole other video on flood zones, and that system is really designed around options. But we're going to skip that for now. The thing that's interesting about this system here is that when I said that most target 1s get hit, that really means that most of them get hit. And even the ones that get stopped out, price tends to come back. I say tends to come back because, of course, nothing is ever 100%. But tends to come back can be good enough, especially if you're taking trades in both directions. All right, so here's the one that took a loss. We got a validated trigger on it right here. Tells us that price wants to come up. And now target 1 is a high probability target. Obviously, we got stopped out here. And we're not going to hold a futures position all the way back up here because that would have been really painful. Okay, you lose a bunch of money, then you get liquidated, you got to close out. Now you're living in your car. You don't want to be that. So what we got to do here is use this and lock it in our brain that price wants now to get back to that level because it didn't satisfy it. And we're trading price, not time. We cannot control time. We can't really control price either, but we can predict price in a pretty reliable way. And so what we now know is that price wants to get back up there. And if there were more days on this chart, that's what I would show you happening, but there are none. So we just have to look into the crystal ball of the future and assume that it played out exactly as I described it. If we want to go back and see some historical examples of this, they're all over the chart. It's almost impossible to not find. So what I'm looking for here is a case where we get stopped out before hitting target 1, and then price came back later. Here we have one that price comes down and validates under, but it's 3 back, right? This is a guideline, not a rule. So you could use this and say it didn't quite come down here. This is kind of an edge case. I'm not sure I buy it. I don't think you could sell that to me if you were trying to. So for everyone that is recent and validated, we are hitting target 1 almost every time. So it makes it hard to find one that didn't happen. Here we have a wick, touches the trigger. Again, we see it all the time. That is a sign. That is a sign of what happened. We went up, 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 up. We went up, 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 up. Okay. Let's keep going back. I want to find one that was validated. AirPods. No. But not hit. Well, anyway, you'll have to trust me because it doesn't look like I can find many that were validated and not hit, which is a good sign, right? I mean, that's the whole point of this. Oh, they should. Oh, wait, maybe here's one. Maybe. No. Nope. They did the thing. It landed on the trigger and it did not close below. No entry. But as price is coming down, it's still valid here, right? And so this comes down. We take out this one. We drop down here. We get another little trade here. Comes in. Comes down. All right, and then the very last thing I will show you for options, and this is a very interesting phenomenon, and I'll probably do another video just on this. And I'm not going to try and cherry pick anything. I'm just going to start on this and just start showing you. But here's an interesting rule, okay? Interesting. Touches T2. Must also touch T1. Now, so you can think about this like the Terminator, right? Terminator was like a time travel movie. If you haven't seen Terminator 2, what are you doing? Stop trading. Stop watching this video. Just watch Terminator 2. It's so good. But if you haven't seen Terminator 2, it's about a robot from the future that comes back to kill John Connor. Again, I don't want to spoil it. It's got Arnold. Okay, it's good. So, but it's a time travel movie. And so what I like to think about this is like, this is the Terminator 2. And the Terminator 2 was trying to affect the events of Terminator 1. It was trying to go backwards in time. And so that is what is happening here. Once price touches this, there is a sort of reaction that makes it need to touch target 1. Now, I know what you're saying. Why don't we just do that? Why'd you make me watch the rest of this video? Why don't we just skip right to this? Well, here's why. There is no defined entry with this particular part of the system. The rest of this system is designed for defined risk, entries, exits, and stop loss, right? Trading. Get in, get out, take your losses, take your profits, get on with your life. This system is designed for staking positions, just like what I just showed you a minute ago, where you have a target 1 that was validated but didn't get hit. This is for, we now know levels, reversal levels on the chart that price is going to want to hit. And so we can use this and say, okay, we've come here. Now we need to come back up to here. Well, that's an easy one. Okay. What about this one? We came down here. We touched this. Well, now we know we need to come up here. So regardless of what happens next, we don't care what happens next. Price comes down, it comes back up when we touch this here. Let's see if we came up here. So I'll put a line up here. We didn't get up there, so we'll ignore that one. But we did get to here. So we touched this one, and this reaction happened quickly. We touch it, and it pops right back down. Look at that. Now, doesn't always happen that way, and that's not a great position to take if you're looking for one. Ideally, the best scenario is that we push past target 2 into the nether regions of some other part of the chart, and then we get a much better entry. So keep in mind, the further you get from a target, the better entry you're going to get. So if we take our target here and we look at this one, we came down and we popped back up. This one never got to target 2, so ignore that one. Let's come all the way down to here. We hit this one, and we popped back up right there. What about this one? Let's use these. There's a target 2, came down here, and then target 1 would have pushed us up here. Let's see, we got it, boop, boop, just like that. Okay. How about this? Target 2, we touch the line, we come back up. How about this? Target 2, uh-oh. Target 2, we need to come back down. There's target 2, there's target 1. Target 1's going to be down here, right? So we came up, this is the move. This is our move from target 1 to target 2. So now from here, we got to come back down to here. When is that going to happen? I don't know. I can't predict the future. Let's see. We'll just do this. Let's see what happens. There you go. That's what happened. Now, Again, I know it looks like I'm just cherry picking this, but I'm just walking through the chart. Target 2, target 1, easy to see. Terminator 2, Terminator 1, these are all getting blah, 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 right? There you go. Terminator 2, Terminator 1. Here we go. Terminator 2. T1, T2, bottom, back to T1. So there's these little reactions, right? And just knowing that these reactions need to take place is enough, because there's always some unfilled reaction level. So while you're trading futures and you're sitting there and you're like waiting for the next setup, or maybe you've already made what you need to make for the day, and you just start noodling around on your chart, you're going to find lots of setups for levels that price needs to get back to. This is a good one. This will show you why we don't want to trade 0 days. So here we go. Target 2 is right here. Target 1 would be up here. So we'll put a target 1. Wow, just put it right there on the line. That was convenient. Okay, so we came down. This move right here now means we need to make a move back up to here. Doesn't happen right away. So as price comes down, bump, 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 it's the end of the day. What are you going to do? Well, if you are a swing trader, you might buy calls on SPY, because now you know at some point it has to come back up here. And let's see how big of a move this is. Maybe it's big, maybe it's not. Let's see. Yeah, we'll just buy right here another close. 0.35%. Are you kidding me? That's great. That's great for options. Just take the trade. Just take the trade. Buy some time on it. Give it 10 days. Not financial advice. Now, I had to blow up my chart here because I ran out of a look back period. But let's make that line yellow and full. And then if we do this, we will see that that would have been just beautiful. Look at that. All right, and that's basically it. So you got your triggers, you got your target 1, you got your target 2. Check your ticker and time frame. Make sure you don't have a bunch of little gaps in between your candles. Set your chart to New York, use extended hours, and happy trading.